Day trading has become popular among traders looking to capitalize from a short-term market movement. The idea of making money from a single trading day is enticing. Some new traders jump into this game without having a proper knowledge. Jumping into trading without a proper knowledge can lead to big losses. Have you ever wondered why some traders make consistently profits? This video is the answer. So if you want to know how to make over $500 trading any instrument of your choice simply by using a simple secret strategy, then sit back, relax, because this video will be a life changer. I'm Jim Reggie. I'm a forex trader. I have been trading for many years and I want to share my experience with new traders. All you have to do is to click the subscribe button, follow the notification bell, and like this video so you can get notified whenever we drop a new video like this. And also don't forget to join our community where we share our experience, where we share our knowledge, and where we share many other things that will help you become a profitable trader. The link to our community will be in the description of this video. Don't miss it. A complex strategy doesn't always bring results. New traders always believe that a complex strategy is the best, but I've been trading for many years. I've learned a lot of things. I've stayed under many mentors, many profitable traders, and I can tell you the truth. Simple strategy can make you a profitable trader. So in this video, we are going to see this simple strategy that can make you over $500 daily. First of all, we are going to see how to use this simple strategy, and at the end of this video, we will discuss how to use this simple strategy to make $500 daily, whether you have small capital or big capital. Now let's jump in. This simple strategy involves using only fair value gaps. So what is fair value gap? Fair value gap is area on the chart where the market moves too quickly and a gap is left to be filled. This can create opportunity for both buyers and sellers because the market will come back to fill this gap before continuing in the direction. But now, how do you define your entry? How do you define your stop loss? How do you define your take profit levels using this only fair value gap? The right answer is this. We are going to jump into the chart so we see how to use this fair value gap. After that, we'll discuss how you can make about $500 daily using only this fair value gap. You understand? Now let's jump into the chart. Here is a practical example of bullish fair value gap. The most important thing is there must be 3 candles. This middle one, for bullish fair value gap, the middle one must be very bullish. Then the first one can be either bullish or bearish. The second one can be either bullish or bearish. But the most important thing is the middle one must be bullish and there must be a gap between them. Okay, as you can see, the wick of this first one did not touch the wick of this second one. Just connect the wick of the first candle and the wick of the third candle and we have fair value gap. You can mark it out with your trend line or with your rectangle. So after marking this out, just wait patiently for the price to pull back to this fair value gap, then look for opportunity to buy. The same thing is applicable in bearish fair value gap. The first candle can either be bearish or bullish. The last candle, which is this one, can either be bearish or bullish. The most important thing is the middle candle must be bearish, and there must be a gap between the wick of the first candle and the wick of the second candle. Just mark it out and wait for the price to pull back to the fair value gap, then look for selling opportunity. Now we are going to see fair value gaps in the markets and we see how to trade them with confirmation. Let's jump into it. Here is a practical example of fair value gap in Euro USD. This is a bullish fair value gap. If I zoom in, you will see this is a bullish fair value gap. 1, 2, 3. And as you can see, when the market pulled back to the fair value gap, what happened? It continued in its direction. So this is example of bullish fair value gap. Let's say example of bearish fair value gap. So remember what I said. This is example of bearish fair value gap. This big candle, that's the space between this big candle. Okay, as you can see, this is a fair value gap. Though this one is bullish, but the most important thing is there's a gap and the middle one is bearish. Okay, so if you trade this line, as you can see, when the price fill the gap, it dropped immediately and continued selling. So we have seen a bullish fair value gap and a bearish fair value gap. The right question now is, how do you trade this? Now we are going to see a simple strategy that can help you trade this fair value gap and make over $500 daily. So to trade using this fair value gap, the first thing is to use your 4 hours time frame to identify strong fair value gap, whether a bullish fair value gap for buys or bearish fair value gap for sells. This is 4 hours time frame on Euro USD. Now, as you can see, this fair value gap was created after the market touched a strong key level. Now, when the market broke this key level, it created a gap. So when you see this type of gap, the first thing you have to do is just wait for the market to pull back to the fair value gap. Then go to the 15 minutes time frame or lower time frame. Look for another fair value gap that dropped immediately. Then enter the market using the lower time frame fair value gap. If the price pulls back to the fair value gap and drop without giving us another fair value gap, don't enter. Okay, because it is assumed that there is no confirmation at all. So the only confirmation is simple. Just wait for the price to pull back and drop aggressively. When it drops aggressively, it will provide another fair value gap in that lower time frame. That fair value gap in the lower time frame should be your entry. Now this is 4 hours time frame, and as you can see, the market approached the fair value gap. Now let's go to 15 minutes time frame or lower time frame to see if we can get another fair value gap.
As you can see, when the price retested the fair value gap, it dropped immediately, creating another fair value gap in 15 minutes time frame.
This second fair value gap should be your entry. Place your short position immediately and target at least 1:2 risks to the word, and your stop loss should be below the fair value gap. As you can see, this is 1:4 risks to the word, and our TP is hit. So this is the simplest strategy that you can use to make money in the market. Just wait for the market to produce a bullish fair value gap or bearish fair value gap. Wait for it to come back to that fair value gap in 4 hours time frame if it is a 4 hours fair value gap. So once it comes back to that fair value gap, go to the 15 minutes time frame and wait for the price to pull down in 15 minutes time frame. Once it does, look for a fair value gap to enter immediately. If the price did not give you a fair value gap in that 15 minutes time frame, please don't enter. Let us check this on another page and see how it goes.
So this is another good example on USD JPY. As you can see, the price created a fair value gap, came back, retested it, dropped. Came back, retested it, and dropped massively this time around.
First, wait for the market to give you a fair value gap. It could be a bullish fair value gap or bearish fair value gap. Secondly, wait for the market to pull back to the fair value gap. Then you go to the lower time frame to look for confirmation. Okay, so now this is a fair value gap. We are going to go to 15 minutes because this is a fair value gap in 4 hours time frame. We are going to go to 15 minutes to find another fair value gap, which will be our entry. So this is 15 minutes time frame. As you can see, when the price pulled back to the fair value gap in 4 hours, it dropped immediately and produced another fair value gap. This second fair value gap should be your entry. Just place your entry immediately after after this fair value gap in this 15 minutes time frame. Your stop loss should be above it or above the previous high. Okay, so you target at least 1:3 risks to the word. So you target at least 1:3 risks to the word, or you target the next low. As you can see, this is 4 risks to the word and TP is hit. Okay, so this is the simplest strategy. Just go to 4 hours time frame, get your fair value gap in 4 hours time frame, come to 15 minutes time frame and wait for a fair value gap to appear in 15 minutes time frame. Then that fair value gap should be your entry. If there is no fair value gap in 15 minutes time frame, please don't enter. This strategy can give you over 60% win rate. This means that it doesn't work all the time. No strategy works all the time, you understand? So apply accurate risk management. So if you have a question, you can drop in the comment box. This is a simple strategy that can give you a quick profit. But now, how do you use this strategy to make $500 or over $500 daily? The answer is this. If you have over $10,000 trading capital, you can simply risk 1% of your account, which is $100. Then target 1:5 risk to reward. 1:5 risk to reward with $100 is $500. And you can make this every day. Every day you come and use this strategy and you make profits. But the truth is, you won't make profits in trading every day. That is the truth. But the most important thing is your profitable days should be more than your losing days. Assuming you have $10,000 trading capital and risking 1% of this $10,000, you can be making $500 daily, maybe 3 times in a week or even more. But what if you don't have up to this $10,000? Then you have to capitalize from prop firms. Prop firms are companies that can give you huge capital if you prove to them that you can trade. Most of these prop firms can give you $50,000, $100,000, or even more than $100,000 trading capital if you prove to them that you can trade. Most of these prop firms can give you $50,000 trading capital only with $20. Like Marvin, this Marvin can give you $10,000 trading capital just with $25 or more. There are many reliable prop firms that can give you higher capital, like Marvin, which is highly recommended for its transparency. We have Funded Next, we have Funding Pips, we also have 10 Trades. These prop firms can give you huge capital just with your small capital, maybe your $20 or $30. It can get as high as $50,000 trading fund. We also have many other prop firms that I did not mention here, but I recommend you check them out. Make sure you do your own review before deciding on any prop firm you will use. This is the end of this video, and if you have any questions, please drop your questions in the comment box. Don't forget to join our community using the link in the description of this video. Thanks for watching, and at this point I say see you at top. Goodbye.